All right, guys, welcome. All you traders, today is Tuesday, January 31st, approximately 1 o'clock p.m. Eastern Standard Time. Let's do a quick cycle through of our major lead indicators to find out what's going on. First chart I have here is the dollar chart. And you can see we are continuing to decline. In fact, I believe this is the 15th week in a row in which we have declined. Let's see here. This was 26th of September. Yeah, about 15 weeks in a row we are on the decline. And that was as predicted. Remember, when we hit this resistance level, this red line here, which comes from all the way 2009, I believe. Yes, March of 2009. We only hit that line twice after that, this being the third time, and I knew it was going to provide us serious amount of resistance. It did so much so that it actually formed a head and shoulders pattern here on the daily, and this is in the process of playing out. So the dollar is continuing to decline, which is not good for inflation, but will be factored into market prices. So it's going to look like the bulls are really on the run here this year. I expect through mid to early fall, we will reach our blow-off top prices on the S&P. Remember, I've said that's anywhere from 5,000 to 6,000. And that is what I expect. Continuing on, let's take a look at the VIX. VIX continues to decline here. We've fallen below some major levels of support, and this will now act as resistance on the VIX. All right, so we're stuck in between two levels here, 19.44 and 2102, but that's a good area for fear to remain at. Investors still a bit cautious here. We're totally accepting that this is going to be a bull run, and there will be a ton of investors that are skeptical. And remember, whenever there is this element of fear, that's when smart money can make a lot of profit. All right, so take advantage of this skepticism if you believe, as I do, that this is the beginning of a blow-off top. I'm not saying that this is another bull run. Blow-off top is different. We are in the process of going into a longer-term secular bear market, but we still have not reached the levels that, in fact, let's just jump over to the US 500 chart, S&P 500, and I will show you longer term what I'm looking at. All right, so let's see. We'll go way back here. Is this the chart I actually want to view? No, it's not. The SPY is. We'll go to the SPY. I believe, yes, this black line here comes all the way from March of 2009. That is when we started our secular bull run. And you can see we have remained above this trend line since March of 2009. All right, so for 14 years now, almost 14 years, we have remained above that trend line. It's not until we break below it that I believe that we will be entering a secular bear market. And even during this pullback, we have quite a ways to go. We didn't even touch that during this pullback. This was not a recession, but a drawback. And this next bull spike that you see will not be another bull market. It will, in fact, just be a blow-off top before the bigger recession, which looms, is coming. And at that point, we're going to have some very serious consequences to all the money manipulation that has been done, all the injection into the economy, all the giving of our money to foreign aid and foreign purposes, and not spending it here at home. Chicken's going to come home to roost. So it will not be pretty at that point, but that does not come till later this year. So you all have some time to make some cash before you go into safer investments and kind of try to maintain your or keep your profits before the bigger recession / possibly bear market comes. All right, so this is the US 500, and I'm looking here at the daily. We've got lots of good news here. First of all, down here on the RSI, you can see we broke out of our we broke above this downtrend, which has been in existence since August of last year. All right, so we broke above this downtrend line. That's very significant, and now you can see we are using it as support. I believe we will continue to use that as support and possibly trend up. All right, continue to trend up on the RSI. You can see these. I had two macro lines here. One was the downtrend line from November of last year. All right, we hit that several times along the way and finally have broken above it. That was this arrow right here. All right, broke above our macro downtrend. And I said in the previous video, I believe, that I don't need to see us break above the macro uptrend for confirmation. We only needed a candle to open and close above this macro downtrend. We got that. In fact, we got two candles closing above that macro downtrend. That was my confirmation that the blow off top has started. We are breaking higher, and we will continue to break higher in my view. If you needed more confirmation, however, we got that with a breakout above our macro uptrend as well. And that's this whole area right here. And you can see today's candle, we are using that macro uptrend as support. All right, if any other proof is needed, let's take a look at the 10-year. And you can see the downtrend continues. We are sitting on a bit of support here, and we could sit on that through March. I expect tomorrow's FOMC, we will see another 25 basis point rate hike. That could keep us up above that area at 3.5%-ish for another month. All right, we may even tag our downtrend line here another time before we, gives us enough momentum to move and break through that support level. All right, that is indicating to us that there will be a pause, possibly a pivot. Well, the pause is the pivot, but possibly a reversal. Instead of QT, we get QE. All right, quantitative tightening to quantitative easing. And that is all something I've talked about with the housing market chart that I have. I will not pull that up again this video. I may put out another video just to continue to update you on that housing chart. But that is my key indicator. That is the chart that I keep a close eye on because it looks as if history is repeating exactly as it did during the 2006 to 2009 housing recession / crash, all right, in which the Fed continued to increase rates even after the housing market was showing serious issues. And then it was not for a full 2 months after we crossed below a threshold, an indicator that shows us the housing market is experiencing serious trouble, which we have now crossed again, that the Fed continued to raise rates for those 2 months after, and then they finally paused. Now we will be going on month number 3 here of crossing that below that threshold on this housing market before the Fed will have paused, if they do in fact pause in March. Now they could surprise us with a pause here in February. I suppose that is possible. I don't think that's going to happen. And then what was the stock markets doing? During the whole decline of the housing market, the stock markets were going up, and they performed exactly what I've predicted, a blow off top. I think history is going to repeat here. All right. If you needed further confirmation, here is our truth line. All right. This is the 2-year treasury. This tells us what the Fed is going to do in the more immediate term. All right. In the shorter term, this is the 2-year treasury. Our truth line, our ascending trend line here, showed us all along that the Fed was going to do some serious rate hikes. Lately, over the past several months, it has been going basically straight across, a little bit of a decline, but that's showing us here that the Fed is slowing rates and is getting ready for a pause. I think what we're seeing right here, this whole price action right here, is showing us that the Fed is going to only raise 25 basis points tomorrow. And then along with that, they'll have articulated some strong or still aggressive language indicating that they're still tackling this inflation. But the 2-year Treasury is telling us that that is just a show. All right. And it's showing us that the pause is coming, I believe, in March. All right. Along with that, guys, keep in mind that we have 3 big earnings reports coming out tomorrow of the FANG stocks. We have Facebook, Apple, and the other one, the other A. Why am I drawing a blank? I've got it here. But they're all coming. They're all coming out tomorrow. Amazon, duh. I just brain fart. All right, so you got to keep an eye on those earnings reports as well. Those will be very important for price action tomorrow. One more thing I wanted to visit here before I'm done with this video, and the update is Bitcoin. All right, so Bitcoin is acting exactly as I expected. I told you guys we'd come up to this 24,200 area that would act as resistance. It has. All right, and I think with tomorrow's rate hike, which I'm expecting to be 25 basis points, the market will still go up and maybe retest that one more time. Now, one thing I was not sure of, and still am not sure of, is will we test that resistance and then come back down and retest? Remember, I told you all about this area of confluence here, 200-day, along with some big support levels, this ascending June 22nd trend line, the support here from December of 21, I believe. They all intersected. Will we come back down after that and retest that area of confluence before we proceed further up? Or will we go all the way and meet this target area of my cup and handle here I've drawn? And will we hit that first and then come down to retest? That is what I don't know, and that is all pending geopolitical news. The way the Fed articulates, it's unfortunate that we have to depend on the psychology of a few men in power of printing of our money for determining the future price action of all of these stocks and asset classes. But that is the way it is at this point. And so this is what we don't know. I'm purely speculating at this point. And remember this, I'm purely speculating that we raised 25 basis points. Jay Powell articulates strong language indicating he will raise it one more time in March. But I don't think that's going to happen. And according to the 2-year Treasury, that's not going to happen. So that's where it is. Investors are simply being cautious at this point. And so we may experience here another month of sideways to up-ish action in the stock markets. And I think crypto will kind of follow the trend, if not do the opposite, and come back down here, and we'll actually get a good retest of our area of confluence. We really need that to move on for me to feel really comfortable moving on, because at some point I do think we will come back down and at least test the 200-day moving average. Now, looking at our RSI, you can see that we have come back into the 70-ish area. That's good. And remember, I told you I would not really want to step into any long trades here until we were at least at that area. But with the Fed meeting coming up tomorrow, even though we're there, I still would not want to step into any long trades. It's just too much uncertainty at this point, guys. Unless we're down in this area on the daily RSI, and you're seeing a correlation where we're retesting this area of confluence, that is really where I'd feel the most confident entering into long trades here on Bitcoin, or if you're more aggressive and following those altcoins, you want to watch Bitcoin for this pattern before you enter those long trades on the altcoin market as well. All right, guys, so that is my little update for today. We've gone 15 minutes on this one. That's about all I got to say. I just wanted to give you a quick update, give you some key items to be paying attention to. The big one is the Fed meeting tomorrow, and then 3 of those 5 FANG stocks, Apple, Amazon, and Facebook, are coming out with earnings on Thursday, and that's those are key items as well. So pay attention to all this, guys, and we're still right on track here with everything. Nothing unusual. Of course, every time I say that, we got some new scamulous news that comes out. We've still got Genesis and Gemini, that whole court issue thing with the SEC. Lots of news happening in the crypto space, and some of it still could be bad, still could break us down. So we need to be a little bit cautious here. I'm still in a long trade from way back here in November. I entered, I think, 20,000 I said last time. Let me just move myself out of the way here. Bitcoin was 20,000, yep, and Ethereum was 1,500 is where I entered those trades. And I've also got one in XRP. I don't know that I'm in the profit on that yet. I haven't really even checked. 48 cents on that one. But that's for my $10,000 portfolio, which you guys are following along with. Again, once I double that portfolio at least, I will not unpause paid subscriptions until that point. And hopefully by that point we will be on this blow off top run here, where we can make some good profit here before we hit that final top, and then get ready to enter into that secular bear market. That's not going to be a fun time in our history. Most of us are only used to a bull market. I mean, because we've been in this secular bull market since 2009, so we've only been trading. I don't know that I have any followers that trade me that, and I personally haven't been in a secular bear market either. So we'll definitely have to trade that differently. It's still possible to make good profits during a bear market, longer secular bear market. This has been a quick pullback, and that is definitely not been my forte to make profit in. Some of you bears who are extremely negative the market, you've done good shorting, and kudos to you. I am long-term optimistic, especially when it comes to crypto, so it's a little bit harder for me to place my bets on the short side. Anyways, that is my video for today. Hope you all are doing well, and we will talk to you in the chat forums and comment sections, etc., etc. Peace, y'all.